The RBA has cut the cash rate to 0.1%. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this media release from the Reserve Bank of Australia, because, well, they've cut the cash rate to 0.1%, down 15 basis points. It's in line with market expectations, which were predicting an 84% chance of a decrease to 0%, and the predictions from Trading Economics, which were predicting a cut to 10 basis points. Now, I'll bring up my chart that I have here that I haven't really had to update all that often because our cash rate has been at 0.25. Now, I haven't updated it, but will you be able to tell? That's the question. Will you be able to notice the difference? Probably ever so slightly. I mean, let's have a look. Let's look at the reasoning. So, and how do you think it's going to get passed on? Let us know in the comments down below, because I'm just recording this just as this has come out, and I haven't seen any tweets or information come from the banks yet. If the banks, the big four at least, are going to cut rates, if they'll pass it on to the average punter. And what would you do with that huge difference in interest rate payments, mortgage payments that you're going to get? And all the savers are going to cop it. Now, I think the idea of actually having money sitting in a bank earning an interest, that's an old-fashioned idea, guys. This isn't going to exist anymore. So, at its meeting today, the board decided on a package of further measures to support job creation and the recovery of the Australian economy from the pandemic. With Australia facing a period of high unemployment, the Reserve Bank is committed to doing what it can to support the creation of jobs. Encouragingly, the recent economic data have been a bit better than expected, and the near-term outlook is better than it was 3 months ago. Even so, the recovery is still expected to be bumpy and drawn out, and the outlook remains dependent on successful containment of the virus. The elements of today's package are as follows: a reduction in the cash rate target to 0.1%, a reduction in the target of the yield of the 3-year Australian government bonds to around 0.1%, a reduction in the interest rate on new drawings under the term funding facility to 0.1%, a reduction in the interest rate on exchange settlement balances to 0, the purchase of 100 billion of government bonds of maturities of around 5 to 10 years over the next 6 months. Under the program to purchase longer dated bonds, the bank will buy bonds issued by the Australian government and by the states and territories with an expected 80-20 split. These bonds will be bought in the secondary market through regular auctions, with the first auction to be held this Thursday for Australian government securities. Further details of the auctions are provided in the accompanying market notice. The bank remains prepared to purchase bonds in whatever quantity is required to achieve the 3-year target. Okay, let's just highlight that, because I think we'll be referring to that over the next couple of years, perhaps. Any bonds purchased to support this target would be in addition to the 100 billion bond purchase program. Okay, so there you go. Is this our governor pretty much saying as much as is needed? To the moon, everyone. At today's meeting, the board also considered an updated set of economic forecasts. The global economy has been recovering from the initial virus outbreak, with the recovery most advanced in China. Even so, output in most countries remains well short of pre-pandemic levels, and recent virus outbreaks pose a downside risk to the outlook, particularly in Europe. In Australia, the economic recovery is underway, and positive GDP growth is now expected in the September quarter, despite the restrictions in Victoria. It will, however, take some time to reach the pre-pandemic level of output. In the central scenario, GDP growth is expected to be around 6% over the year to June 2021 and 4% in 2022. The unemployment rate is expected to remain high, but to peak at a little below 8%, rather than the 10% expected previously. At the end of 2022, the unemployment rate is forecast to be around 6%. This extended period of high unemployment and excess capacity is expected to result in subdued increases in wages and prices over the coming years. I mean, wages have been stagnant for a very long time. And I'll bring up the chart that just wage growth predictions in the past of the RBA showing their repeated failure in actually forecasting it. So, in underlying terms, inflation is forecast to be 1% in 2021 and 1.5% in 2022. In the most recent quarter, year-ending CPI inflation was 0.7%, and in underlying terms, inflation was 1.25%. The board views addressing the high rate of unemployment as an important national priority. Today's policy package, together with the earlier measures by the RBA, will help in this effort. The RBA's response is complementary to the significant steps taken by the Australian government, including in the recent budget, to support jobs and economic growth. The combination of the RBA's bond purchases and lower interest rates across the yield curve will assist the recovery by lowering financing costs for borrowers, contributing to a lower exchange rate than otherwise, and supporting asset prices and balance sheets. At the same time, the RBA's term funding facility is contributing to low funding costs and supporting the supply of credit to the economy. To date, the authorised deposit-taking institutions have drawn $83 billion under this facility and have access to a further $104 billion. Given the outlook for both employment and inflation, monetary and fiscal support will be required for some time. For its part, the board will not increase the cash rate until actual inflation is sustainable within the 2 to 3% target range. When have they last had that for? Let's just jump over here. Let's just jump over here to trading economics and let's look at some indicators for, where is it? Where is it? We want inflation for Australia. We'll go indicators country, because when did they last have it at that range? The inflation rate. We'll just go here. They want it 2 to 3%. It's sustainable within the 2 to 3% target range. Let's bring this chart out to max. Okay, we'll go to 10 years. So here, so it was kind of there in, what was that? Not since 2015, 5 years. And then it was all over the place. Let's go a bit further out. 25, so here, this band is where they want it. So it's kind of been all over the place. The further we go out, well, there you go. I mean, the targets didn't even exist back here, did they? So does that mean they're never going to increase interest rates? So I honestly thought they might wait until next month. Oh, what? They can't. Of course not. It's December. They don't do it on December, do they? They take December, Jan off? Let me know in the comments if I'm mistaken. For this to occur, wages growth will have to be materially higher than it is currently. This will require significant gains in employment and a return to a tight labour market. Given the outlook, the board is not expecting to increase the cash rate for at least 3 years. The board will keep the size of the bond purchase program under review, particularly in light of the evolving outlook for jobs and inflation. The board is prepared to do more if necessary. And there'll be a press conference at 4 p.m. today. So, there we have it, everyone. The board has cut the cash rate to 0.1%, down 15 basis points. Pretty much said that they will buy bonds in whatever quantity is necessary to achieve the 3-year target. What do you think? What impacts do you think this will have on the economy? Does this scream of confidence or does it scream of desperation? And do you think, are they ever going to be even able to reach this inflation rate? Will the banks pass on the rate? Let's go here. Let's jump over to good old Twitter. It seems to be the best. Nope. Let's look at CBA Newsroom. No updates. No. We'll look at ANZ. Nope. 5 hours ago. Westpac. Nothing. Since the 28th. Wow, Westpac aren't doing too many tweets. So let me know if the banks are passing it on, or let us know in the comments, guys. There you go. I can't say we're too surprised, but there you have it, everyone. Crazy times. What do you think? Next year, negative rates? I've got another video that I've just done about they're deferring, or CBA has guaranteed a moratorium on forced sales until September next year. Wait till you see that video. Anyway, have a great day, and I will see you all. Oh, wait a minute. No, I've got to do my outro. Thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time.